All right, so I wanted to do a portfolio update. It's something I haven't done in quite a while, so I wanted to do that. First things first, as always, if you get value out of the video, please like, subscribe, comment, check out those links below. Always appreciate the support. So getting right into it here, let's just go over basically everything. The first one, basically in order, is MSTY, and I own that for obvious reasons in that I use it as a income, a way to gain income, essentially, right? It's paying, depending on the months, I think as low as about a 70% dividend, as high as about a 150% dividend. So that's why I own that. I'm basically even on that, down ever so slightly. And this is also a position that I sell covered calls on. Every single, maybe not every single, but virtually every single stock or ETF that I own that I can sell calls on, I will sell calls on. And again, I've gone over this in several individual videos, so I won't go into detail. But the very simple reason is covered calls are an easy way to make extra money, especially with your more volatile positions. Again, and if you understand options, you'll know why that is. Second is STRD, which is one of the MSTR preferred shares stocks. I also have STRK. I do have a limit order in for another 100 shares of STRK and another 200 shares of STRF. I do plan on holding, again, probably 5 to 10%, maybe even a little bit higher, of STRF, STRD, STRK, and BMAX. And the reason for that, I've gone into detail on this as well, but I think that one of the most underrated medium to long-term trades right now is these stocks and these ETFs, because when you look at these Bitcoin treasury companies, specifically MicroStrategy or Strategy, but even like some of the other ones, this is one of the most underrated fixed income that we've ever seen. And the reason for that, which I've gone into before, but just briefly, Bitcoin is the best asset on the planet. 95% of people have not figured that out yet, but eventually, I've always said that the majority of people never will buy Bitcoin, just because, I mean, look at how, I mean, the majority of people live paycheck to paycheck, but I mean, if you go back 20, 30, 40, 50 years, all you really have to do to retire at least moderately wealthy, if not very wealthy, is, put 10 to 20% of your income in stocks or real estate, and you'll do that. Do that for 30 or 40 years, you'll be able to do that. And this is not a secret by any means, but yet look at how many people are still flat broke at 40, 50, 60 years old. And yes, Bitcoin is better than stocks and real estate, but in my opinion, it doesn't really matter, right? I mean, Bitcoin could return 50% per year for the next 10 or 20 years, and I would be surprised if the majority of people own Bitcoin, especially directly. Indirectly through like pension funds and retirement, yeah, maybe, but directly, I still doubt it. And again, my whole point is being at least moderately well off. It's incredibly easy. Like it's so easy. It's almost not even funny. At least if you're in the first world, right? But yet, look at how many people still can't figure it out. And if they can't figure it out with the current way of doing things, what makes you think that a different way of doing things is going to get through to them? So that's kind of a side rant, but again, you understand my point. So again, BMAX is my fourth largest position. Like I said, this is not something that I'm going to get up to like that, 10, 15, whatever percent right off the bat. It's going to take a little bit of time, because it's not something you want to do right off the start. You kind of have to ease into it. But that is something that I always will hold. And once people figure out that these are the most underrated form of fixed income we've ever seen, then I'll probably start to cut my position. But I think we're probably 5, 10, maybe even longer than that away from that. The next one, IDMO. Again, this is my favorite international or ex-US ETF. This is like the International Momentum ETF. This has performed historically, I mean, over the long run. I mean, over like the last 10 years, it's roughly the same as the S&P. But over the last year, it's like destroyed the S&P. The last 2 or 3 years, it's beat the S&P. I think maybe even the last 5 years. So I think that, and again, I've talked about this before, I think that especially if you're American, basically only if you're American, but international exposure is something that this is the theme of the last, basically 2025. Look at how much a lot of these international funds or international sectors have beat the S&P. So I think that this is going to be a thing of the future, right? In that, and not to mention too, like this, people blame Trump for a lot of this kind of stuff, but I think that this is something that probably is going to become more common because given how in debts and how weak a lot of economies are, the way that a lot of these leaders are going to go about trying to fix that is through tariffs and protectionism. Because it's an easy sell. Like, it's an easy sell for people that really don't know what they're talking about. I think that I can understand, tariffs in maybe a select, very, very specific, niche sectors. But, broad sweeping tariffs, the basic economics just completely disproves the idea that they work, because it makes things more expensive, right? In that it's the classic, robbing Peter to pay Paul. And I mean, Canadians, like, as a Canadian, it's kind of funny too to see Canada's reaction to it, because a lot of Canadians fell hook, line, and sinker for this. So Trump he's so bad for doing what he's doing. But then on the flip side, they support, supply management, for example, right? Which is the exact same thing, right? So it's kind of funny that when Trump does it, it's bad, but when Canada does it, it's good, right? Again, this is why so many people struggle, because they can't figure this stuff out, even though it's incredibly easy to figure out if you're actually open-minded and, have a basic level of intelligence. But again, that's a little bit of a side issue. But long story short, I think that you definitely want international exposure, especially if you're heavily exposed to U.S. markets. I still think the U.S. market will perform well, but I think that it's a risk that is not that's just not willing to take, right? I don't see how the NASDAQ especially, but the S&P continues to absolutely destroy a lot of these major international indices like it has over the last 10 or 15 years. I think it still probably beats it, but not by nearly the same margin. EQB is a position that I'm slightly less bullish on than I once was. Hence why it's, again, no position here is a massive position. Even MSTY is the largest position. It's still not that large. And the reason for that is EQB's numbers have fallen off a little bit, not that much. I still think they're going to do good, but the one thing about it is that, I mean, you look at like the Wealthsimples and some of those, like they're starting to get some competition. And I think that, I mean, for obvious reasons, right? Because I think that the traditional big banks in Canada are so archaic that it's really not even funny. Like, a lot of the things they do is just, like, for example, right? I have a bank account with EQB. I have an account with Wealthsimple. I have an account with one of the big banks. And if I want to do anything with one of the big banks, like, let's say, like probably 6 months ago or so, my card got compromised, or my online banking got compromised, and there's no possible way to get a hold of someone over the phone. Like, it's just not possible. Maybe if you're willing to wait like 2 or 3 hours on hold, maybe. I think I waited like 20 or 30 minutes, didn't get anywhere. So again, that's the problem, right? That's the problem. Again, you have all these branches, but you can't do anything. Like, a basic issue happens with your online banking, and you're 2 or 3 hours on the phone, or you have to go to the branch, which again, I had to stay there for an hour and a half to get it fixed. So again, just that kind of stuff. And the whole point I'm trying to make is there's no possible conceivable way that is the most efficient way that you can solve those problems. And someone is going to come along and have a more efficient way. And when that happens, again, it could be EQ Bank, it could be Wealthsimple, but it's definitely not going to be one of the big banks, because they have a massive existing advantage over the EQBs and the Wealthsimples of the world, and they're losing market share. And again, unless they solve these problems, which again, they're probably unlikely to solve the problems because they have a much larger advantage. So again, I think that EQB still will do well, but I think competition definitely is a little bit concerning to me. Go Easy is another one. I like Go Easy. Regulatory concerns is something that definitely is making me not want to have it be such a massive position, but I still think they're doing well, and I still like them. Main Street Equity, this is one I just talked about, so I'm not really going to go into. Honestly, I probably will try to get this one as the larger position, this one the better. This I might even get to be my largest Canadian position. GameStop, I own it simply to trade options on. And that again, they did buy Bitcoin. Olympia Financial, again, I've talked about them before. Mainly an income play, but I remember talking about this one like in the mid 100s. It's up like 20% since I talked about it, which was maybe 6 months ago. And again, they paid like a 6% dividend. So I really like this company. I'm still buying them where they're at right now, but they're definitely bordering on overvalued. This is a Canadian MSTY, obviously the same as the US. DNG, Dynacor, they're like a smaller, very small cap gold miner. Again, a risky play, but I do like them. Urbana, this is another very small company that I own. High insider ownership. I like them. I think that they're actually kind of outperforming ATD. They're in a similar industry. So again, I like them. VDY, this is just a Canadian index. YBTC, this is again a weekly Bitcoin covered call ETF. XDT, similar, basically the same thing for the S&P. JEPQ, basically the same thing for the NASDAQ. FBY is the Yield Max Meta or Facebook covered call ETF. QQQI is again a NASDAQ ETF. MSTE is the levered MSTY. AMZY is the Amazon Yield Max one. SPYI is an S&P covered call. BABO is the Alibaba covered call. TSMCY is the TSM covered call. SMAX is just like a broad US market covered call ETF. HDIV is basically Hamilton. It's like a diversified covered call ETF of their covered call ETFs, which again, this one's actually performed really well. Of all the Canadian covered call ETFs, this one has probably performed the best of any of the ones I've seen. They're actually outperforming the S&P over the last 3 years, which is very impressive because the vast majority of covered call funds do not do that. So that's, again, this one I'm actually trying to increase my position on. MSFO, the Microsoft Yield Max ETF. And then QDTE, RDTE, these are NASDAQ and Russell 2000 covered call funds. And then CHPY is basically the chip maker covered call ETF. IMSTE is the Bitwise MSTR covered call fund. So again, that is my position. Those are all my positions. And what is my strategy going forward? It's very simple. I want to get as much MSTR, that will be my largest position. I'm selling puts on them, which none of them have hit on yet, so that's why I don't actually have a position there. But eventually, it will happen, and then I will up my position probably I don't know, 5 to 10% just in MSTR, and then again, I'm also just broadly buying a certain amount of your ETFs every week. So the ETFs that I dollar cost average into every week is the QQQ, RASP, VDY, IDMO, SPMO, and then VB, VO, and I'm pretty sure that's all of them, right? So those are the ETFs I buy, and then again, I do dollar cost average into stocks, but again, there's too many of them to go over. Just off the top of my head, and there's too many of them to go over. So that is basically what I'm doing right now. As far as the market goes going forward, a lot of people are like, oh, the S&P is back over 6,000. It's too expensive. It's going to crash. And again, my opinion is, you don't want to ever change on this kind of stuff. The best strategy, in my opinion, dollar cost average your ETFs and dollar cost average into stocks that are not overvalued. It's actually quite simple. So anyway, that's what I wanted to bring up today. If you liked the video, like I said at the start of the video, please like, subscribe, comment, check out those links below, and stay tuned for more.